How many decentralized projects are actually controlled by insiders before the public even shows up? Kaspa is not one of them. No pre-sale, no venture capital stash, no silent unlock bombs. It launched clean and it's been scaling on raw tech, not hype. While other chains brag about speed they might achieve someday, Kaspa actually rebuilt how a blockchain works. Instead of making one block at a time, it can create many at once, which means faster confirmations and a network that keeps up even when things get busy. In this breakdown, we're hitting the essentials, the tech, and why GHOSTDAG actually matters, tokenomics with the nearly fully mined zero insider supply, the growth, I'm talking ecosystem expansion and major miners jumping in, risks, those you cannot ignore, and of course, the Millionaire math, what different price targets mean for your stack. By the end, you will know whether Kaspa is overhyped or one of the cleanest proof of work plays in the market. So let's get into it. This is not financial advice, always do your own research. Kaspa launched in November 2021 through what's called a fair launch, meaning zero pre-mine, no pre-sale, and no tokens allocated to insiders. It was built from the ground up by the community. The mastermind behind Kaspa is Dr. Jonathan Sompolinski from Harvard University, whose 2013 Ghost Protocol paper is actually cited in Ethereum's white paper. Originally developed through DAG Labs with backup from Polychain Capital, Kaspa transitioned to a fully decentralized community-led model right after launch. So what makes Kaspa special, you may wonder? Instead of a traditional blockchain, Kaspa uses a block DAG architecture, specifically the GHOSTDAG protocol. Think of it as multiple blocks being created and processed simultaneously, rather than just one at a time. This allows Kaspa to currently process 10 blocks per second, with ambitious plans to scale to 100 blocks per second. That's internet speed transaction finality right there. As of late November 2025, KAS is trading around 5 cents, with a market cap hovering near $1.36 billion. That's all good, but what about Kaspa's tokenomics? The project's financial architecture is actually its biggest differentiator in the current crypto landscape, focusing on long-term scarcity and fairness. Looking at the numbers, the max supply is approximately 28.7 billion tokens. Notably, the circulating supply is already around 26.8 billion KAS, meaning over 93% of the total supply is already in the market. That high circulating figure is a key factor because there are zero token allocations for the team, the foundation, advisors, or venture capitalists. This fair launch means you don't have to worry about a sudden VC or insider token unlock crashing the price. Kaspa manages its supply via a unique chromatic halving schedule. Instead of the abrupt 4-year Bitcoin halving, the block rewards decrease smoothly every month. This gentler curve results in an annual emission reduction of exactly 50%, providing predictable scarcity for miners and investors alike. As a pure digital cash network, Kaspa relies on proof of work security and therefore has no native staking or yield incentives. Now, let's look at the performance. And you may wonder what Kaspa's headline feature is. Well, it is speed. The network currently runs at 10 blocks per second after the crescendo upgrade, a hard fork that successfully increased throughput while maintaining stability. Developers are working toward 32 BPS with a long-term vision of 100 BPS. Real-world use cases are expanding rapidly too. Marathon Digital, one of the biggest Bitcoin miners, announced they've mined 93 million KAS tokens worth approximately $15 million as a revenue diversification strategy. On the ecosystem front, Kaspa has seen explosive growth. Over 100 decentralized applications now exist on the platform. In August 2025, the Kasplex Layer 2 ZK EVM rollup launched, bringing Ethereum virtual machine compatibility to Kaspa. This means developers can deploy Solidity-based smart contracts, unlocking DeFi, NFTs, and complex dApps. KRC20 tokens, similar to Ethereum's ERC20, were introduced in December 2024, providing foundational infrastructure for asset creation. The social media community has surged to 500,000 followers across Twitter and Telegram, which reflects strong grassroots engagement. And I was pleasantly surprised to find out that developer contributions grew 50% year over year, signaling healthy long-term ecosystem development. As usual, I will not allow myself to overlook the risks, even if a project seems quite positive at the outset. Well, Kaspa's fair launch story is its greatest asset for decentralization, but it's not without risk. The pure community-managed open-source governance model, combined with the 0% insider allocation, is highly resilient against centralized control. However, Kaspa does rely on miners for security, and it will need to keep expanding its public node count. The major risks are largely technical and competitive. Regulatory risks exist, indeed, as with all proof-of-work assets, though its security profile is similar to Bitcoin. Technical risk centers on the successful deployment of the complex DAG protocol and the continued growth of the new EVM ecosystem against established competitors like Solana and Avalanche. If this EVM ecosystem fails to gain traction, then Kaspa risks remaining a niche, fast payment rail rather than a global general-purpose platform. Now, let's move on to the price action as we come closer to the $1 million question. See, Kaspa has had a great bullish run, gaining over 10,000%, and it hit its all-time high on August 1st, 2024. But since then, the price is in a correction and is currently down 75%. However, given the project's core technology development activity and roadmap still progressing, I think brighter future is ahead for Kaspa. Now, for the fun part, guys. How many KAS tokens do you need to become a millionaire? First, the bear case. Let's say it hits the previous all-time high at 20 cents. That would be 4x from here. And for that, we would need 4 million tokens right now, which would cost us $250,000. Second, the base case. The price hits 50 cents. That would be 2.5 times from the all-time high and 10x from the price right now. In that case, we would need to buy 2 million tokens worth $100,000 today. And lastly, the bullish case is if Kaspa goes to $1. That would be a mouth-watering 20x from here, which means buy 1 million tokens for $50,000 today and just relax. This bullish scenario would take the Kaspa market cap to the staggering $25 billion. And if that was to happen today, Kaspa would be a top 10 coin. Dreams are for free, as they say, but here's what could turn these scenarios into reality. In other words, what would propel Kaspa to those high valuations? The answer is institutional access. For example, Marathon Digital's entry validates Kaspa as a diversification asset for large-scale miners. Major exchanges like Kraken, Binance, and Coinbase now list KAS, and that dramatically improves liquidity and accessibility. There's currently no KAS ETF, but given Bitcoin and Ethereum ETF approvals, it's not out of the question if Kaspa achieves top 10 status. See, institutional demand coupled with the proven speed of the technology is the necessary fuel for that $25 billion market cap. Now, to summarize, Kaspa has solid fundamentals, elite decentralization, and genuine technological innovation. The fair launch creates long-term holder alignment, but it's still early, unproven at scale, and faces fierce competition. So now you've got the full picture. You know the tech, the numbers, the risks, the upside. And guys, if you've got value out of this breakdown and you want more content like this, then hit the like button, subscribe to the channel, and share this with someone who keeps asking you for the next big crypto. Because if they don't see this, they'll keep buying garbage. See you again next time here on airdrops.com. Ciao.